We're joined in the studio by Anthony Landahl. He's from Equilibria Finance. Welcome back to the program. Great to have you here.
Good afternoon.
I feel like we've had quite a lot of news on the building front, not just the building approvals today, but we've had some change in policy as well, coming significantly in New South Wales when it comes to stamp duty. We talked about this a little bit earlier on. Are you one of those that sort of laughed when you heard the baseline, which is up to $800,000, there will be no stamp duty?
Yeah, well, there's a couple of elements to it. As everyone's probably read, the baseline's now moved to $800,000. So for a first home buyer, that could save them up to about $30,000. And one of the biggest challenges for the first home buyers is the deposit. So that will contribute. I guess one of the issues is it's only on new dwellings, newly constructed dwellings. So for existing homes, where a lot of first home buyers are still in the market, the threshold is still $650,000. But they reckon it'll have some impact across about 6,000 first home buyers, with the threshold then decreasing up to $1 million. But I guess one of the challenges is that it's only for newly constructed dwellings, as distinct from established properties, but it will assist some first home buyers get in the market, absolutely.
Anthony, do you think there's a risk that we're actually just bringing forward demand when we're going to see a period of weakness regardless? Because we know the population growth is going to be weak for quite some time. By trying to throw as much in the construction sector at the moment to go and build, it's understandable. But do you think there's a risk that maybe we're just trying to go and transfer the problem to a later date?
Yeah, there's a lot of talk about, I suppose, September and October and what's going to happen there. There is a lot of stimulus around at the moment with the construction industry, with federal government initiatives around home builder, the first home loan deposit scheme. We've obviously got the state government initiative around stamp duty, but what we are seeing is we're seeing a shift in the market. We're seeing a lot more activity from owner occupiers. We're seeing a lot more activity from new home buyers and first home buyers. So I think there will be a little bit of an impact like you're talking about, but I also think that some of the activity that may have been previously happening is that space is being taken by new home buyers who are finally getting some opportunities through some of the government initiatives and some investor behaviour sitting on the sidelines.
I was going to ask you, New South Wales has introduced a proposal to go and do more build to rent. Now, not everyone in Australia is familiar with that, but obviously it's been done in other parts of the world. Could you just explain to the audience out there what build to rent actually implies? Yeah,
essentially build to rent, it's a popular scheme overseas. It's not as popular in Australia, and the New South Wales government is proposing a 50% cut in land tax to try and encourage developers to take on the build to rent program. Essentially, they are building unit developments where they will manage the development and they will look after it for the renters, and essentially they're designed just for renters. So it gives them certainty about where they live, it gives them longer term certainty as renters. They can paint the property, they can have pets. Essentially they treat it as they own it, however it's owned by the developers. So rather than the developer selling 1 or 2 units to an investor or a home buyer, they own the whole block. There's a minimum threshold of 50 units. New South Wales actually just rolled out their first build to rent in Homebush, and they're getting some renters to come in. So it gives renters long-term stability about their housing arrangement, and it also gives the developers an opportunity to do larger developments where they know they're going to get the security of the renters. And the government, the Berejiklian government, is proposing a 50% cut in land tax to encourage developers with these sort of projects.
That's going to be really interesting to find out how that goes in Australia. I have a friend who, it's a bit different because it's not necessarily units, but I have a friend who's from the Netherlands who her family has lived in the same home her whole life and they rent. That's just sort of the norm in a lot of places, and they can do their floorboards and they can do everything else. So
that's essentially what it's designed for, give renters their own home in that type of environment.
I might be going a little bit off piste, but when it comes to rental agreements, do you think that there's not enough flexibility as it is? I know that for the build to rent, it's designed to go and give that longer term certainty. But at the moment, so many people I speak to say when they rent, they have so much difficulty signing anything beyond a 6-month lease. That's all. Do you think there's grounds to actually go and try and introduce longer leases where there's more rights going to the tenants rather than the owners?
Yeah. Well, the legislation's still to be inked on this particular arrangement, but as I understand at the moment, they're looking at renewal periods over a 12-month period, so lengthening those periods. But essentially they are looking at longer term rental agreements. Now, I'm not quite sure how that'll look, but a lot of renters struggle with having to move every 6 or 12 months and having shorter term leases where in some cases as well, the landlord is in a position where they're able to move a renter on, or a property gets sold and they have to move on, which creates that uncertainty and instability for renters who may which is very common overseas, be long-term renters.
Well, you feel very vulnerable if you think that you can be moved on at any time. I'm curious, just because we're getting the big rap, but how have you seen demand going in your business? Like, is the main overarching theme of this pandemic so far, when it comes to finance, refinancing?
There's a lot of opportunities for refinancing. What we've seen essentially has been a lot of people now understand their situation from an income perspective. Credit policies have changed. So people who are able to refinance are doing that because there's some really good rates. But we are also seeing a lot of activity for home buyers looking at getting in the market. So we've got a lot of pre-approvals in place and approvals in place for new home buyers looking at taking advantage of Home Builder, looking at taking advantage of the stamp duty concessions that are coming out, and looking at taking advantage of the first home loan deposit scheme. And the government released another 10,000 places on the 1st of July, and 40% of them are already gone. In fact, NAB already have a waiting list for them. So, yep, refinancing strong, but we are also seeing a lot of activity from home buyers.
Just on the refinancing point, just one quick one. What kind of rates are you seeing in the variable space? Because I know a lot of people out there are still looking with mortgage rates with a 3 handle on it. What are you seeing out in the marketplace?
Yeah, look, variable rates are oscillating. We can get as low as 2.55 in the market for a variable rate with good product features around offset accounts. Fixed rates around about 2.09, 2.19. So there's a lot of people who haven't looked at their mortgage. They've got a 3 in front of it. The opportunities are there at the moment, and a lot of people are locking in a fixed rate. But there's also some very competitive variable rates in the market. Yeah,
you're not doing that, you're giving away free money.
Yeah, well, do your homework, right? Anthony Landahl, always great to have you in. Thank you.
No worries.
Joining us from Equilibria Finance.